Hi, welcome to this video today, which is on the 12th of October. It's Saturday. Just going to give our updated outlook for the British pound. Now, in terms of the GBP today, we are going to look at it against the USD. We're also going to look at it against three commodities currencies, the AUD, the NZD, and the CAD. In terms of Euro GBP, I'm not going to cover it in this video. I've covered it in my general outlook for the Euro, so you can check out my views there. Now, in terms of the British pound, I've done quite a few videos on it recently, and we were waiting for a big move up in the GBP, and we've got that. Okay, so the pound has made a nice move to the upside. A lot of people have asked me, have they missed the move? Is there more upside to come? Pound is so oversold. Yeah, I think there's plenty more upside in the GBP. Now, in terms of the GBP, generally very happy with our trading in it. Big exposure to pound longs. We felt the risk reward was really good. And most of the pairs have done exactly what we thought they would. But there is one exception. And I think it looks a fantastic buy, although it hasn't moved as much as I thought it would to the upside. We've seen some upside in it, but not really big upside. There's a massive move coming in this pair, and the pair is actually GBP CAD. So we'll obviously look at that, the other commodity currencies and GBP USD, so we'll do that right now. But please do keep in mind, it is my view as of right now. It can change in line with the market conditions. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, you can click on the link beneath this video and you will get live access to our member centre. Right, let's go take a look at the trade setups. The one we're going to look at first is going to be GBP USD. Just very quickly on the GBP USD monthly chart before we go to the daily chart, just want to point out a few things that are important to us in terms of trading the British pound. To new viewers, I know regular viewers have seen me do this chart before, but just very quickly. Here comes the Brexit vote candle, nice big red, tumble down as speculators see a hard Brexit. Now, into this low, or the low here, 120, round number, you had heavy smart money on the COT net traders positions, our favourite sentiment tool. They just bought heavily the commercials as speculators sold against them. The commercials come out on top and we move up to above 140. And we noticed on this big fall here, the smart money and the speculators doing exactly the same again. They build up positions that are almost identical here to where they were here. So we felt that downside in the pound was limited and the 120 level would not be taken out significantly. And we bounced from the level quite nicely with 3 monthly blue candles, obviously highly volatile though. So we're 650 pips higher. But in terms of trading the British pound, keep your eye on the big picture. This is not a big recovery. Look at this recovery over here. My sort of target longer term is going to be up to 140. Now, obviously, it's going to be volatile. It's not going to be one-way traffic, and there is a level in between. But I think that is realistic. So, a lot of pips to go, okay, in our view. Now, in terms of the daily chart, we're going to go and take a look at it now. Just go through the sentiment fundamentals and draw our levels of entry, stop, and target. GBP USD daily chart, we shall do some levels in a moment. Now, obviously very important to look at the fundamentals and sentiment behind the chart. Now, in terms of these points, you just go through them. Point number one, the odds of a no deal are obviously low now, but they were low when the GBP hit 120. In the media, the financial media, they're saying, oh yeah, the chances of a no deal Brexit are high. They weren't high. You could just go and try and take a bet at your local betting shop and you just would not have got good odds when we came into the 120 level. So Forex traders are saying, yeah, chances of a no deal are high. But if you look at most people who are sensible analysts, they would say, no, they're pretty low actually. There will be a deal probably done. Now, in terms of why we've got the pound spiking up and all the optimism about a deal being done, is because Boris Johnson, the UK PM, is forcing a conclusion. Now, what he's saying is like, okay, 31st of October comes, UK will leave without a deal if necessary, but would prefer a deal. Now, in terms of the media, they don't make enough of point number three, because this made us really bullish of the pound. Now, Parliament did pass a bill for an extension to Brexit. So what they said was, right, Parliament is taking over the PM, and the government can't be kind of trusted. You have got to go as the UK PM, Boris Johnson, and ask for an extension to Brexit, okay, which the EU would give, okay, but doesn't apply, does it? And it's not, enough in the media. This is why the negotiations are going at breakneck speed, because it doesn't apply. Okay, the bill's been passed in law, by Parliament for Boris Johnson to ask for an extension, but he doesn't have to. This guy here doesn't get it. This is the shadow Labour Brexit minister. He's in the opposition, obviously. If he doesn't, that's obviously Boris Johnson, ask for an extension, we'll enforce the law in the courts and in the Parliament, whatever it takes, we will prevent a no-deal Brexit. Well, what he needs to understand is, yes, Parliament have passed a law that Johnson has to go and ask for an extension, but he doesn't have to take it, because EU governments, or the EU, can only deal with governments. They can't deal with Parliament. So basically, Johnson can say, well, Parliament have asked for an extension, will you grant it? The EU probably say yes, then Johnson can turn around and say, well, we don't want one, we're the government, you have to deal with us. And that's been made clear to the EU. That's why you're seeing the EU working now with the UK to get a deal done. They don't have the upper hand, so to speak, which they had previously. Let's say when they were dealing with Theresa May. They want to deal with the EU. Okay. EU economy is near recession, isn't it? We've looked at the Euro in numerous videos, and the data points to a recession. They have a trade surplus with the UK. What that means is the EU do more business with the UK than the UK does with Eurozone. And all you hear in the media is how the UK economy is going to have a really bad time, if the UK leaves without a deal. Well, what about the EU economy? They do more trade with the UK than the UK does with the EU. They're going to get hit hard, really hard, and they know that. Okay, so basically the negotiations are going quickly, and you'll notice conciliatory comments from a lot of EU representatives. Jean-Claude Juncker, for example, Donald Tusk, a bit more conciliatory after he had an outburst a little while ago. But this is the key here, I think. Boris Johnson, Leo Varadkar, Irish PM, agreed they could see a pathway to a possible deal. Leo Varadkar, go back a few weeks, he didn't. Now he does. The big powers in the EU know a deal needs to be done. And I think behind the scenes, the real person who wants a deal is Angela Merkel. Because Germany can get really hit hard by a no deal just due to the amount of trade Germany does with the UK. So it's all progressing quite nicely, not ruling out twists and turns, But I maintain, and have done for a while, that a deal will be done. And I think a deal will be done. Outside of Brexit, GBP or UK economic data has been okay, hasn't it? It hasn't been that bad. It's been arguably better than Eurozone data. And I still think that the Bank of England are the only central bank that need to hike rates. And they do because of inflation. With Brexit uncertainty removed, I think you get a rate hike. That's heavily bullish for the pound. So the sell-off was mostly down to Brexit uncertainty. Now, in terms of the way we've been playing this trade, obviously we've come off the 120 level. And for us, we were saying, sorry, let me get my line straight. There we go. This candle tail here just so bullish, and the way we reverse back above 120. No more sellers, a nice blue candle coming on the next. Up we go. We did give back a significant bit of profit as we dropped down, but still came out with a reasonable profit. And then we come down to the 122 level. You see the candles all pretty small, indicating uncertainty. But yeah, no real conviction to go significantly lower. And yeah, we basically were in at 123.30 with our second trade. Nice move to the upside. Now, in terms of this pair, because it has been so volatile, we're kind of basically quite aggressive in taking profit off the table. Okay, so the minute it's 300 pips, saying to anyone on Friday in the member centre, no harm in taking 50% off. We don't know what's going to happen over the weekend. I do think we're going to run on, but if you take half your trade off, then you can keep your stop back behind a key level with the second portion. You still you still would get stopped out the profit, lesser profit, but you got that bank profit. And I'm all for when you've got enough, take half off the table. And this pair has been so volatile. Now, in terms of levels, in terms of support, sorry, I'm just looking at the support level. It's there. Because what you got, your 126.44. I've put the stop at 124.70 at the minute. Okay, giving it a little bit of room actually. Yeah, because I don't rule out easing back a little bit, but this looks a good level. Okay. Next week, obviously, when we open up, we've got to decide, obviously, whether we're going to put our bank profit back in and where we do it. Well, this applies for fresh trades as well. If we are above the 126 level, near around where we settled, 26.20 or 30, then basically put it back in. That's where I'd come in long if I wasn't in already. What about if we drop back a bit? Well, if we drop back to the support level, I would just look to come in on strength. Now, in terms of speculators, good few have been hit on these two candles here, but there's still plenty of speculative shorts in the market. I think, we've got minor resistance at 128, but really the level between where we are now and 140 is 132. So, I think we should hopefully see some follow through. If we do get a retracement, then we can deal with it off this level. If we suddenly came down further than that and we became flat, we'd be looking to buy the GBP on strength. So from our perspective, obviously, very bullish of GBP USD. In terms of previous videos, I made the point that USD is a relatively strong currency longer term in our view. So in terms of GBP, sell it on currencies that are weak. We consider the euro weak. Obviously, pound's done all right on that. You can check out my other video. But our real focus in terms of our major exposure in pound longs has been against the commodity currencies. Now, what I'm going to do is quickly go through GBP, NZD, and AUD that look like they're going far higher, and they've really moved quite nicely. Then I'm going to do an in-depth analysis on GBP CAD. GBP CAD, it hasn't moved that much. The CAD has been strong, but I think, the CAD is about to break down. It's been the strongest major recently. GBP still the weakest major if we take it over the last year. GBP on the CAD looks a fantastic risk to reward trade in our view. But first of all, let's do the other two commodity currencies. I think I'll just make this point. We've been bullish of the GBP on the commodity currencies for a while, obviously, and we couldn't decide which one was going to move the quickest, so we did all three. Okay, just treat it as one trade. We're not going to get the best, we're not going to get the worst. Okay, about a week and a half ago, I switched my major exposure to GBP CAD in the commodity currencies. Of course, that's the one that hasn't moved as much as the other two, but I do think it is going to play catch up. I think it looks good. Let's do the AUD and NZD against GBP first, and then look at GBP. Right, just using charts to our member centre for GBP AUD, GBP NZD. Then we'll go and look at GBP CAD in a little bit of depth. Now, terms of all three pairs, still exposed to them. And yeah, obviously GBP CAD is my biggest allocation now, but these pairs look really good as well. GBP's gone up in a kind of choppy fashion. And this is where taking 50% off the table when you've got enough is a good idea, because some of these retracements are quite vicious. Okay, up, another vicious retracement. That one there actually took us for a loss. The rest we got some profit out of, but latest one doing okay, 450 odd pips in profit. And I think in terms of this one, yes, it has moved up quite nicely, but keep your eye on the bigger picture. Monthly resistance at 2. Taking 50% off the table. How will we play it? For fresh positions and for our bank profit going back in, if we dip a little bit, we'd come off this level. If we don't dip, we'll just come in again and look for a run at 188 and a break. I do not see too much downside in this pair. This has been pretty choppy actually in terms of the way we've moved up. Next one's a smoother one actually. It's GBP NZD, and yeah, both these currencies, AUD and NZD, they've got nothing going for them going forward in our view. Slowing global economy, they're exposed to global trade, they're slashing interest rates. They had really big moves up on the British pound. They've already had big moves down on the British pound, and there's plenty more upside to come. This one is a nice one because we're in at 194.30, and she's bounced really nicely up to 199.56. So a little bit more profit in this one, 500 pips. How would I play this one? Very simply, get through the 2 level, hurdle the level, go up to 205, then 215. That's a long way to the upside. Dip back to this first level. I've come off there as well. And this one's been the smoothest of the three. You can see when it breaks the 20-day moving average here. We don't break it till back here. Okay, long move up or big move up, then obviously you do get the break. We just basically came in long as soon as prices steadied up, and yeah, so far so good. In terms of GBP CAD, like I said a minute ago, hasn't performed the way I wanted it to so far, but it has. It's making us some profit, but I thought it'd do a lot better. But I think it's only a matter of time before GBP hammers the CAD, hopefully. Let's go and take a look at the chart. I'll go through the reasons why. GBP CAD daily chart. In terms of my monthly target, longer term, 183. So a long way to go from where we are now, which we're just below the 167 level. There's a level in between, which I'll come to in a moment. I'll do the technicals now. In terms of this pair, it has gone up, but we haven't done so well in this pair. In terms of we've got more out of the other two commodity currencies than this one. But yeah, I'll really focus on this one going forward. Yeah, I had some profit out of it. Previous trades and the latest trade is doing well. It's 162.70 in, 166.82 close. So near enough 400 pips, isn't it? But looking for more, we shall see. But before we draw some levels, let's have a look at why we're so bearish of the Canadian dollar. Basically, I just think the bullish fundamentals have peaked. The market sees no rate cut before mid-2020, and speculators are heavily long of the CAD. And the reason they don't see any rate cuts before mid-2020 is because the economic data coming out of Canada has been pretty decent. If you were looking at a major economy that's doing pretty well, it's Canada. However, the Bank of Canada will, sorry, I spelled Canada wrong there, will probably cut before the end of the year. Why will they cut? Well, basically, they're already cautious and looking forward, and they're seeing obviously the global economy is slowing up. You've got trade wars, you've got commodity prices likely to fall. That's all going to impact on Canada. Okay. They'll be very mindful of this. Business investment is falling. Well, when that starts, that's a warning that the economy is going to slow up generally. They'll obviously be aware of that. They're also very aware of consumer spending is the weakest in Canada since 2008, and consumer spending, major part of Canadian GDP. So obviously a cut would help the consumer. From our perspective, it's the most overbought major of all, not just on GBP, but in terms of other currencies as well, which I'll cover in a separate video. And despite the GBP moving up, it's still the most oversold major over the last year. So it has been a nice move up, but we finished off the highs. How would I play this one if I wasn't in it? Well, got some support there, which is the breakout point. Okay. And then really, I think you've got a second level of support here. So basically, we're trying to get up here again on these three bodies, and this body rejects, that tail rejects, big blue settles at that level, and then the next blue pushes off. Yeah. So I think, yeah, providing we open above this level of support here and you see some strength, I've just come in long, stop behind this second level, bank behind the round number and the tail. Okay, always want to be behind the round number, so 164.75. Then see if she runs. Now, if I look at this big move down here, that was pretty one-way traffic, wasn't it? Coming up, it's all pretty choppy. I'm looking for a bit more one-way traffic. You could say there's some resistance at 170, but I'm just going to go for 177. So it's a pretty decent risk to reward, even if it opens where it closed. Really good risk to reward in our view. So yeah, very focused on this one. Obviously, we're focused on the GBP generally. Done well so far. Be interesting to see what the new week brings. So yeah, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.